Okie dokie. Got everyone in here. Okay. Alrighty. So if this is your first time with me doing a live teaching, this will be recorded. It will be uploaded and shared around. For this lesson, we're going to be covering prop firm risk and really how I think most people should be, especially if you're newer to trading or not quite profitable. This lesson is, if you have a winning strategy and you're just struggling to pass evaluations, this lesson will be a game changer for you. So without further ado, I'll get started. So I'll do the intro. I'll save all your questions, write them down, type them in chat, whatever you'd like to do. But I won't be going over them until after the lesson, but I will do them after the lesson, I promise. Okay. Before I start, something's off here. One second. My brain is going to hurt trying to figure this out. What am I doing here? How do I do a percentage divided by 100? What's 20% of 300 or 3,600? Oh no. Technology. All right. Just going to fix it myself here. Okay. Off we go. $3,000 times. Okay, so it'd be equals this divided by this. Oh wait, times 0.1. No. No. Okay, I'm going to switch it back anyway. Works for 10%. I don't know why it doesn't work for 20%, but I digress. And I have this stupid taskbar in front of my screen. Can you guys see everything correctly? Is it just going to be me? If that's the case, it's fine. Okay. It looks like everything is working on my end, or showing correctly. Someone can confirm, then we will get started. Looks good. Okay, perfect. Thank you. There we go. Alrighty, what's going on, guys? It's Expo Jesse. Today we're going to be going over the first lesson in a little while, but going over prop firm risk. So I have this little calculator. I will share it. Everybody will have access to it. What you'll do is you'll go up to the top left, hit file, and then hit make a copy. And from there, then you can rename it if you'd like to, but it will be all yours from there. So without further ado, we'll get into it. So I think the biggest struggle that a lot of people find when they start working with prop firms is when to trim. And a lot of times what they do is they'll trim at 1R and only take a couple off. Say that you have 10 micros, right? And you're willing to risk $200 a trade. So you do a 10-point stop. Well, price hits your 10-point PT, and then you only take 2 micros off. So you only made, $40. Well, if price would have hit your stop loss, you would have lost 200. So your risk to reward there is way off, right? So I think that for simplicity's sake, I think that most people need to do this method here, which is the 1R account. It's something I've been testing since the start of the year, and my 1R account has outperformed my trims almost every single week, especially when there's not a gigantic trend to catch. Even on the days that I catch a trend that goes 10R, with trims I only take home about 5, maybe a little bit more than 5R. And so that got me thinking earlier on in the year that, what if I just got out all at 1R and then re-entered? And surely between 1 and 10R, or 1 and 10 times my risk, there's got to be more setups in there. There are. And so for simplicity's sake, I made the spreadsheet, and we're going to go through my track record in January and go through and simulate what the account balance, obviously not including commissions because I'm not smart enough to make a calculation for that, but just based on risk to reward, when I got out, and capping out my trades at 1R, this is what my results would have been. So the top part here, I'm just going to show you how to use it. You can put in your drawdown size and then your risk percentage per trade, and then calculate how much of your account that you want to risk. So if I want to risk 10% of my drawdown, it would be $450. Then you can go over here and say, okay, you would input into the stop loss size. You don't touch the top side or the bottom side. Both of those will be automatically calculated for you. So let's say I'm going on to MNQ and I'm willing to risk $450 and I want to have a 40-point stop. Right here, it tells me that I am supposed to buy 5.6 contracts. So you can decide whether you want to do 5 or 6. And based on the calculations, I know that 5 contracts of MNQ moves $2 a point. So $10, it would move $10 a point. If I were to hit my stop loss, I would lose $400. So that's correct. Let's do it for an NQ. Let's say that I have a 10-point stop. I can buy 2.2 NQ. So you can go through here on all of these and show what your stop loss would have been, or what you want your stop loss to be, and then it will spit out the contracts accordingly. So make sure that you size and do that math on your own as well. But this is a quick intro to that. So, if I'm doing MCL and my stop loss is 40 ticks, it would be 0.4 because it's 40 cents of one whole dollar. And so let's say I wanted to increase it to 1. I know that, okay, that's got to be a little off, but you get the point. It'll move on, and I'll fix that calculation before sending it out. But same thing with CL, or sorry, with gold. Gold moves $10 per micro. So if I have a stop loss size of 10 and 10 points, then I can lose 4.5 contracts per point. So that is the calculator. Very simple, and I'll fix that MCL before sending it out. So back to trade management, and this will be very, very simple. Like I said, you're just gonna, or what I would do is get in and out based on 1R. So in this example, on the 2nd of January, I got in at NQ short with a 20-point stop. Let's say that I'm in the 150K top step, so I'm risking $450 per trade. If I put in 20 in here for micros, I would have bought 11 contracts for MNQ. And then my result, I have to change, actually over here, I have to change this. So my result, because I got out at 15 points, and this is very important, if I'm getting out at a half R, then I need to get all the way out. One thing that you could do is get half out at half R, and then you can decide whether you want to get the other half out at 1R or push it to 1.5. But there's no reason to go further than that. And if you can, I would probably just wait until 1R. That's what I would do. Obviously not financial advice, but backtest what works best for you and your trades and your trade journal. And so you can see that my drawdown, my account size here, let's change this to 150,000. And my drawdown size is 4,500 because that's my total drawdown. I want to risk 10% per trade, $450 risk. So the challenge for Top Step is $9,000 is your profit target. And based on the 1R account, I can see that I would have made 337 and lost 450. Now this is where it's very important to have the correct mental, because you don't want to, and sometimes I even struggle with this, is you don't want to go bigger size just because you're down. And so same size here gets me back up to 150, over 150K. And then it looks like by the 12th, I would have passed the combine just based on 1R. And this is just an easy bracket order where, especially on Top Step X, you can put in your risk that you're wanting to take before you enter the trade. And you can say, hey, I want to lose $450 and I want my automatic bracket order to be $450. And so you can do that. And then as long as you calculate correctly on your stop loss size and how many contracts to buy, then it will set that bracket order for you. And then you can just walk away and either hit your stop loss or your take profit. And what I do is after my first trim, which is usually around half R, it depends on the trade, of course. But if my first trim is 10 points, then my stop loss usually goes back to break even immediately. I never want to have a green trade turn red. Nothing would irk me more than taking profit out of a trade and then actually losing money on the trade total. And so, yeah, I would always go to break even after my first trim. I say that all the time. I love that for me. If that doesn't work for you, then do what works for you. But for prop firms, I think that, like I've said, I don't want to make this drag it out just to hit a video size or a length. But I think that a lot of people struggle with profitability, not because of a trade, the technical side of them knowing how to trade, but rather how to manage their losses and their wins. And the name of the game is making sure your winners are equal to or bigger than your losers. Very, very simple. If you're willing, I say this all the time, win rate doesn't matter at all in trading. It doesn't matter. It doesn't matter as much as people think it does. Because if I have a 99% win rate, but that one loser blows up my account, I have a 99% win rate and a blown account. So win rate doesn't mean as much as people think. Sure, it's fun to win more. I have had win rates in the 85 range and then upwards to 90% range, but my trade statistics are somewhere in the mid 70s and I'm profitable. And so I think that step one is learning to lose. Best loser wins. And number two is making sure that your winners are actually impactful. And I think that if a lot of people stuck to the 1R trade system here where, you're capped out, sure, it would suck to see a trade go from, 1R to 5R and you're sitting on the sidelines. But, what's worse is you winning 3 trades and then you lose 2 in a row and then you're red on the day. And so for me, the 1R account works better than trims most times. And as you can see, the fluctuation, even here where I had 3 losers in a row, my fluctuation didn't even drop me below 150K. And so yes, win rate, obviously you need to be above a 50% win rate to make money on a 1R account, but this is assuming that your win rate is above a 50%. So that is my prop firm calculator. Like I said, I'll share this in the link in the description on YouTube and in the recording, and I'll fix whatever's going on here with CL. But that is how to safely pass a prop firm challenge. And the biggest thing is you really don't want to go above 10% risk, right? Unless you're very profitable already, and challenges, it takes away from your main money making journey, or trading on PAs. If you can copy trade, there's no reason to risk more on a evaluation. Just don't be impatient, because ultimately if you fail, you're going to buy it again, and it's just not worth that. So I would say to risk the same percentage per trade, definitely risk the same percentage per trade, but never risk I don't ever really risk more than 10%. Sometimes on evals, if it's on a different platform, then I'll risk up to 20%. But now everything's kind of getting all into one platform. And then especially on something like TopStep-X or NinjaTrader or Trade8, where you can copy trade across account sizes and change the ratio at how you copy them, there's really no reason to risk more. So key points, wrapping up: risk percentage, stick it at 10% for me. 10% of my total drawdown. That way I have to lose 10 trades in a row. And I don't think I've ever done even 7 trades in a row lost. I think most of the time my loss streak is around 3 to 4. And then, I can work myself out of it. You see here the 3, I lost 5 trades out of 7. And I went from a theoretical balance of 151,500 to down to, I really only lost $1,000 total. And then the next 6 trades I won, 5 trades I won. And now I'm up to 2,800. Lost down to a little over 2,000, won 3, back up to 35. So you have to just be okay with these ebbs and flows, but as long as your risk is the same each time, then you can get all the way down to, you can, the little things add up is what I'm getting at. Obviously this is just Excel or Google Sheets rather. So, you can make calculations for what your theoretical return could be. But what's important and what you should take out of this lesson is that the same risk all the time, making sure your winners are equal to or bigger than your losers. And obviously you have to have a winning trade strategy to pull money out of the market. But hopefully this helps. Like I said, risk calculator will be public, and you can throw your trades in here. And how I have it is your entry or stop loss size here. So I'll put that here actually. Stop loss size, then return. Just throw that in there, and then the rest should populate based on what the end stuff you input here. I can delete this. Alrighty, that is it. I will see you guys for the next one. All right, recording is done, so I'll open it up for questions. Could you just move your stop loss up to that 1R? That way, if it keeps going, you are in. You could. This is where changing too much with your strategy versus just taking profit at 1R is detrimental for most. Because if you're trying to catch those 10R trades, like I said earlier, the 10R trade that I grabbed today was net 5R. And so, yeah, the trims worked out more today, but on days where I hit 1R, then stop loss break even 5 times, I'm up 5R in my 1R accounts, whereas I'm probably up 2R or so on the trims. And then if I lose 2 in a row, then I'm break even, versus on the 1R account, I'm up 3R. Lorenz said, here's a cheat sheet I use. This is required stats for break even. Neither win rate or RR is significant over each. In my opinion, just beat this chart and you're cooking. Yeah. If you need a fraction of a contract, do you recommend rounding up or down? I mean, it won't impact you too much, but I would just round according to how you're feeling with the price action that day. Like today, I would have just rounded up because it just went up, right? But like if it's just chopping, I'd probably round down. But like I said, it's probably not going to impact you too much. Huey said, awesome. Thanks, Jesse. Can't wait to play with spreadsheet. Yeah, let me figure out what's going on here. B10. Yep. Oh, that's the problem. MCL is not 10, it's 100. Joseph, go ahead. You can ask whatever. It's open Q&A. Do you change risk percentage if you are down or up? No. There can be a discussion for that, but yeah, I haven't messed around in drawdown too much with lessening risk, but I know some people who do. Nicholas, what if you format the 20 as a percentage? Here, let me see. Percent 20. Nope. I don't know if there's any Excel wizards. I don't know why this is not computing in my brain. Oh, gotcha. So I heard Rob Smith talking about cutting losers, and he seems to say that it shouldn't be in drawdown a lot, but I find the opposite when I trade. Yeah, I would disagree that, I don't know. I get the theory that it shouldn't be in drawdown a lot, but I don't think that, at least for me, that's not how the market moves. And one big thing is that I've learned on my swing trading specifically is that if I'm taking a trigger on the weekly time frame, I can't get out based on the hour time frame. Or if I'm taking a trigger on the monthly time frame, I can't get out just because one day was red, because that's just not how price works. Price goes from liquidity to liquidity. So if price is going down to go up and I'm in a call and price is going against me and I'm getting shaken out of every time I'm in a little bit of drawdown, you got to understand how the market's moving and why, because, I just shouldn't be shaken out of positions just because it's going to grab liquidity from the other way. But also there are times where I'm just dead wrong. Look at Coke, for example. I was wrong on Coke for a while, but then it just grabbed liquidity and now it's back up and I'm up 75% on the contracts. Yeah, exactly. It seems that your losers will eventually catch up to your winners if you keep cutting losers around break even. Yeah, it could. If you're going 1R then break even, then you're, like I said, if you're going 1R then break even, you're only taking home about half R. And then if you take a loser, then you're going to get caught at, you're going to be down half R. Which is why the 1R is really the best thing for 90% of traders. I think, my opinion, not financial advice. Mr. Unemployed said just the opposite for me. Well, that's good. If I'm taking a buy stop order and the market is trendy, I usually don't see a ton of drawdown. But if it's not, then obviously it depends on what time frame you're buying on. If I'm taking a 5-minute signal, I can expect to see a little bit of drawdown versus a 1 minute. Christopher said, is it a good idea to stick with micros first because the trailing is messing with me? Oh yeah, trailing sucks. Yeah, I would. The risk percentage is probably the best thing for you there. Risk per trade formula should be drawdown size times percentage of risk. Drawdown times. Okay, let me try that. Is that correct? Let's see. Yeah, you got it. Thank you. So let me change that. Oops, change that. Perfect. Yep, that works. Thank you very much. New York Envy, appreciate it. Also, I don't know if NY Envy is actually New York Envy, but it's just what I've called you for so long that it's kind of just stuck in my brain now. I don't know. Whenever I see NY, it's all I think about. Also, you could risk, if your drawdown size, you want to do your daily loss limit, then you could do it like this. Well, you got it right. New York, but nothing to envy. Nice. Oh, man. Off-topic question: when starting off the strat, how would you trade it? Would you just use full time frame continuity and candle patterns? I think I would use that no matter where you're at. But I wouldn't necessarily care as much about full time frame continuity being in force. Let me get my words. I wouldn't care about what the daily, weekly, monthly time frame is on if I'm trading on the 5-minute chart. If I'm trading on the 5-minute chart, I want the 15-hour and maybe the day. So I do the 3 time frames up strategy. So Lorenz, you can't be putting Canadian flags. That's wild. Dang, Canadians haven't won the Stanley Cup since '93. What a tough scene, bro. Tough scene. All right, I'm going to end the YouTube stream here. I'm going to put it unlisted because I'm going to upload the video. But if you guys have any questions from YouTube, please send me a DM.